Hello, welcome to a JS Services Strategy Review. Today we're going to go over a neutral digestion market state with the R level outside the critical range, and we're going to use cocoa as an example. So the market's in neutral, digestive condition, and the unique part of this condition is that the sentiment bias, our R level, is outside the critical range. So what this does, it forms a resistance band at the top of the range. And in cocoa, that's from 3028 to 3012, between the R level and the upside pivot. Between the R level and the upside pivot. This condition is unique because it is the closest number to the upside pivot, so it's really just an extension of the upside pivot, versus if we had the R level significantly above the market, that would create more of a bigger zone, and there would really be two distinct potential areas for that upper lid. So when the R level is greater than the upside pivot, we have this nice band, which is really a good area for exhaustive signals. And if we look at the optimal strategy themes in this market structure bias, we have sell R fade. So we're going to fade momentum into the R level, but we're also going to accept a sell UP reversal. And so the logic here is that we know that this is a band. We know that the top of the band is the R level. We'd like to fade momentum into it, and if the market turns in this band, we're going to jump on it with a reversal. But we can really accept any exhaustive signals within this zone. Taking a look at the structure on a daily chart, when we come in, we see our support pivot is matching up with the previous session's low point in the second previous session, low area. And then we have our R level is coming in off this low here. So we've got some good structure, and it makes sense. You've got some price structure lows here as well as here. So this is a good failure point for this real negative aggressive action. So the market did bounce back up into neutral digestion. Again, this is all quantitative, so we're just looking at quantitative structure on top of a chart. So this incorporating some technical analysis into the quantitative structure, and we can see we have a band here that we're going to look to fade into as the optimal strategy theme. So taking a look at the overnight action in cocoa, I've put our price map levels on the chart. They're dynamically linked, and I've also added our market metrics, our alert distance for both the upside pivot and the R level. And we can see overnight the market pressed into the upside pivot. So we're anticipating a fade against the R level, not a fade against the upside pivot. We want to see an emotional move through the upside pivot and looking for an exhaustive signal in this zone. So we did get a rejection, a half APMD, but in this market state the optimal signal is in this zone. So as we move forward, here we're getting an event, sharp surge. So I've added a couple simple indicators, just volume and an RSI. And so what are we looking for? We're looking for that exhaustive signal. We're looking for an exhaustive event. So an oscillator getting overbought, a volume spike. We're looking for this exact type of a signal within this band. That's the optimal thing that we're looking for, some exhaustive signal to tell us that there's a potential reversal. The other thing is breaching this alert distance. So as the market breaches this alert distance, this is a price qualification that we have a violation of the upside pivot. Now the market falls shy of the R level, comes back up for a potential retest, holds below here, and can't do it. So as the market's failing back through the alert distance to the downside, and we're making a new price low here, and we have a lower high and a lower low. We've had an event signal, two triggers, two events into our zone. At this point we have high confidence that this strategy theme is in play, and our expectation is that we're going to rotate to potentially the bottom of the neutral zone down to the downside pivot at 2950. What else do we know? We know that the directional is a big pivotal point within that critical range. That's the rotational number within the critical range. So 2979 is going to be a good pivotal point for us for the follow-through of this negative signal. But the key is we have clarity that the market is produced an event, gave us a trigger, and now it's price qualifying. So we move forward here, and the market does follow through. And what's nice about this signal is it really never looked back. After we had our event and we price qualified, the market gave us a few opportunities to get involved. This is our sweet spot area to sell. We've got our negative signal. Anywhere in this zone is a valid sell opportunity. Because we're selling this zone looking for a move down to this zone. If we're selling here, our trade vision, our price expectation is a 2A PMD move, 2 average price map distances. And so here they give us a trigger, and they give us a signal. And after they give us this signal, even though we're in neutral, we're anticipating a trend move. Just like this. This is our expectation. You could add a simple moving average, but we're just watching price action. Here again we get a price qualified failure from this level, and then we get a pullback. So now we're watching price action within market structure, so the market is starting to stair step down price structure, stair step down the price map. Here we stabilize here, and we're still stair stepping. And our trade vision is the market's making a play for the downside pivot. When the market is in this state and structure, we don't always get the optimal theme, so we want to be prepared to put the proper leverage on. When we have the right cards, we have to bet big, especially after we have multiple events. We have our exhaustive event, we got our price qualification through our alert distance, back through our alert distance, market break structure, and at this point we have real high clarity where the market can go. And so keeping that trade vision, opportunity to work the trade here. I added a simple moving average here. I was talking about working a position. You have your exhaustive event. The market gives you your signal of confirmation, and then your expectation is the market's going to have a trend move. So here's 1 average price map distance. Our target is 2 average price map distances. So they attain our initial target. We're expecting this market to trend. We're stair stepping the price map. We get a reaction here, another reaction here, and the market continues to stair step. And we could use a simple metric like a moving average to keep us in line that, okay, as long as we're working negative price structure, as long as we're working negative market structure, as long as we're below this metric of a moving average, that's our story. We're sticking to it. The market's going lower. It's transitioning lower. Since sentiment is above the market, our actual strategy to the downside is a buy DP reversal, so we're actually anticipating the market to potentially even take this level out as it searches for support. Coffee is in a similar market state as cocoa, so let's take a look at that. Looking at the bigger picture, here's the structure on the daily. We've got our resistance identified. Coffee is a little different, where we have our upside pivot coming in, right on yesterday's high point. So that may keep things a little tighter on this one. And then we do have the R level above the market. So if we do get a squeeze, that's going to be our fade on the coffee up to 130.60, and we have the upside pivot defined at 129.65. So that's our optimal area. Take a look at the microstructure. So we look at the performance on coffee. We see that at the early start of the overnight session, we pressed into the upside pivot, banged up against it a little bit, and then we had a classic signal where the market's pushing in. It gives you this confirmation here that it wants to go lower, and then a big squeeze head fake, and then it follows through to the downside. As the market's pushing in here, we're waiting for that event. We're waiting for that exhaustive signal event. That's the real tell of this reversal strategy. We definitely want to see the market breach this level. Ideally, we'd like to see it breach the alert distance. I added the variance here, so you can see the market pushed into the variance here and then rejected, and then here we're taking out the variance. We did have a volume event here. This is what one of the events we're looking for, as well as the RSI was in the overbought area. So we had a little same conditions, little event. From our prior technical analysis, we knew that this 129.65 level was going to be an issue. Market starts to roll over. It didn't give us our ideal thing, so if we did have some sales against here, those are valid. but we have to understand that our real size comes in after an event, and we're looking for a push into the R level. We don't get it. The key to tell here is after we have this emotional spike, this event, we price qualify back below the alert distance. So here's your trigger. You have this emotional surge. That's what we're looking for in a reversal, some exhaustion. And this price qualification confirms that. So after we get this price qualification, we're looking at this high. This is our point. And we're anticipating the market to build negative structure. Not only negative price structure, but negative market structure. So we can see, these highs here are above our figure. So we like this high and these highs. It's going to work negative structure. It pulls back, holds the figure, makes a new price low. And now we're just going to work negative structure. What's the price high? We're going to key off this. We're expecting that negative price structure. Again, simply making lower move lows, lower move highs. We're anticipating an impulse move down, targeting at least 1 APMD, which is the directional. And we can see the market working negative price action, and also here we get a failure from this low, another fresh sell signal here. Again, keeping that trade vision, what if this market, that was the exhausted turn, where do we have clarity? We have clarity here, we have confirmation clarity here. Even for a move from 28.5, down to 27.75, it's money. What's our trade vision? Our trade vision, our expectation is for a play for 125.90. That's our story. We're sticking to it. As long as the market continues to have negative price structure and work negative market structure, we're going to continue to have that expectation that the market's going to make a play for the downside pivot. And here's the alert distance from the downside pivot, and the market attains our metric. So a full 2 APMD average price map move where we'd anticipate some stability. We're not looking to go long unless we have that event to the downside, because we're looking for that buy DP reversal. So we're looking for an event below the downside pivot that's price qualified to give us a trigger that, okay, this negative sentiment from the R level, this negative theme here is over. The market may be transitioning out of neutral digestion into more of a negative transition, and if that occurs, we'll see a rejection from the directional, and then this negative momentum will just continue, and all this negative price action will just continue. Lower move lows, lower move highs will continue to work negative market structure, so it should stay below the directional if that's going to happen. Silver was also in this market state. Neutral digestion with R level above the upside pivot, same strategy themes. Performance-wise, things were a little different. Use a different charting application here to show silver. And silver did not give us that exhaustive signal at the UP R level range. It was the midnight, overnight, the market really had more of a rotational day, difficult session around the directional. And when we look at the strategy themes, the optimal theme is to sell here, or to accept a buy reversal here. So most of the session there wasn't not a lot to do. This strategy here is called a sell DIR CR breakout. This is a classic price map strategy where the market breaks out of the critical range first, and then we look to enter on a pullback against the directional. Breakout above the upside pivot, fade a pullback to the directional, breakout below the downside pivot, fade a pullback against the directional. That strategy came into play late in the day. Late in the day, we broke out below DP, didn't price qualify below the alert distance. Here we price qualify below the variance. Down, silver gets a little thin here, and we get that emotional move at the end of the day. Wanted to show you this just for, to have clarity. Is there an opportunity? Is there a strategy theme in play? No. There's not much to do. Do you really want it? These are low probability opportunities to trade the ranges. When the market's given us an optimal theme, we want to leverage up on it. We want to be patient. We'll focus our signal acceptance on our key market metric areas. Late in the day, we get an opportunity. The day's pretty much over, but we're patient. We're waiting for those opportunities. Or we're looking for other markets. The key with this state and structure is this band, and you'll find, if you like to have deviation strategies, it gives you a whole big zone to work with for your oscillator signals or turning point signals, to really look for. The market does, works best when it does push into that zone and you have an exhaustive event, so you can't anticipate it. you can anticipate that reversal. So you don't have to wait for the price qualification. You could start to lead into it. And then if you don't get the price qualification, you bounce out. If you get it, you're leveraged up, you're ready to go. Because you want to be able to have enough size on to work the whole position. Let the market work it for you. So this is a great state and structure for all these different states. Neutral digestion, these are all non-trend states. When the R level is outside the critical range, it creates a nice band for you to align your trading tactics with. For more information, please contact us at info@jsservices.com.